Welcome back to another custom-tailored deep dive. And I want to address you directly right off the bat because I know you. You're a learner.
Absolutely.
You're someone who wants to just, completely bypass the noise, the information overload, and get straight to those real aha
Right, the
moments.
stuff that actually matters.
Exactly. And today, man, we have a bizarre one. We are diving into the fascinating and honestly paradoxical world of Tanla platforms.
Paradoxical is definitely the right word for this one.
It really is. I mean, imagine a company that just posted record-breaking profits, right? They've got double-digit growth.
Incredible margins.
Yeah, but then you look at their stock chart and it literally looks like it's falling off a cliff.
It's a bloodbath on the chart.
So that's our mission today. How can the business engine be running hotter than ever, but the stock is just crashing?
It's a massive disconnect.
To figure this out, we've pulled a pretty serious stack of sources. We've got Tanla's Q3 FY26 investor update from January 2026.
Which is packed with data.
Oh, heavily. We also have a recent technical chart analysis from mid-March 2026. And we're layering on a comprehensive perplexity news coverage analysis looking at the last 12 months.
That's going to give us the whole picture.
Right. Okay, let's unpack this, because before we can understand why the stock is plummeting, we really have to look at the underlying business.
Yeah, you have to look at the fortress they're fleeing from.
Because it's a fortress. The business is doing incredibly well.
It really is an invisible giant. If you look at that Q3 FY26 update, I mean, the numbers are stellar. We're talking quarterly revenue hitting 11,210 million rupees.
Which is up, what, like 12%?
12.1% year over year, exactly. And gross profit reached 3,093 million rupees.
Okay, wow.
Yeah, that's up nearly 19% year over year. But the real kicker, the profit after tax, the PAT, is sitting at 1,314 million rupees.
So they are incredibly profitable.
Highly profitable. They dominate the market. They hold roughly a 35% market share in India's CPaaS sector.
CPaaS being a communications platform as a service, right?
Right, exactly. And they process over 800 billion interactions a year.
800 billion. I mean, when I was reading that, the analogy that came to mind is that Tanla is basically this invisible digital postman.
Oh, that's a good way to put it.
Or like the plumbing of the internet.
Right.
Because every single time you get a bank OTP or, a flight delay text.
Food factor code.
Right. You are probably relying on Tanla's pipes. You never see their logo anywhere, but they serve 9 of the top 10 banks in India.
And 7 of the top 10 insurance and social media companies. They are everywhere.
So they're deeply embedded.
Very deeply. And what's fascinating here is how this connects to their broader business model. 100% of this revenue comes from SaaS business models.
Software as a service.
Exactly. And that means it's highly predictable, it's recurring, they aren't starting from zero every quarter.
It's sticky.
Very sticky. Which leads to their free cash flow, which is just incredibly strong. It's 1,368 million rupees.
Wait, so the free cash flow is higher than the profit?
Yes. It's 104% of their profit after tax.
That is wild.
It means they are highly efficient at taking those paper profits and converting them into actual cold, hard cash.
Okay, so the balance sheet is basically pristine.
Spotless.
So my mind immediately goes to, well, if the financials are great today, maybe the market is terrified of tomorrow.
Right, the obsolescence fear.
Exactly. Like they're resting on their laurels, getting disrupted. But then we looked at their forward-looking tech and...
They are definitely not resting.
Not at all. They are pushing this Wisely.ai platform.
Yeah, their 3-layer modular architecture, data, AI, and product.
Right, and it claims to detect threats in under 10 milliseconds. But, okay, here's where it gets really interesting, and I gotta push back on this a little bit.
Sure, go for it.
Every single tech company on Earth right now is slapping AI onto their pitch decks.
Oh, absolutely. Total buzzword overload.
Right. It's buzzword bingo to keep investors happy. Is this Wisely platform actually real needle-moving innovation, or is it just fluff?
It's a fair question, but the sources show it's actually very real. They hold over 11 patents for this.
Oh, 11 patents?
Yeah, real intellectual property, specifically for the Wisely ATP platform, which is anti-phishing and threat protection. You have to remember, global telecom spam isn't just annoying anymore.
No, it's massive fraud.
It's a multi-billion-dollar problem.
Yeah.
So Tanla isn't just selling SMS anymore. They are selling cybersecurity. They are selling AI-driven trust.
Okay, that makes sense. And they are taking this global,
Yeah, massive global ambitions.
yeah,
They just opened a new office in Indonesia.
which is a huge market.
Huge. And they didn't just open an office, they partnered with Indosat, the telecom giant there.
And they're using NVIDIA technology for that, right?
Exactly, using NVIDIA tech to fight spam at scale.
Ah,
Plus, they are scaling their RCS, the Rich Communication Services, to 1 billion messages a month.
1 billion. And didn't they just win an award from Google for that?
They did. Google's RCS Growth Partner of the Year.
Okay, so you don't win Growth Partner of the Year from Google with fake buzzwords.
No, you have to actually deliver.
Okay, so we have an invisible giant flushing cash, paying out dividends, building cutting-edge AI, partnering with NVIDIA and Google.
A seemingly perfect setup.
Right. So let's pivot to the massive elephant in the room,
The stock chart.
the bleeding apocalyptic stock chart. Let's look at the mid-March 2026 technical data.
It's tough to look at.
It is. The stock is trading at 414 rupees and 60 paise.
Down from a 52-week high of 766.
That is a massive haircut, nearly half the value wiped out.
Yeah, and it's in a confirmed downtrend. It recently suffered a death cross.
Right, a death cross. For the learner listening, that's when the 50-day moving average drops below the 200-day moving average. Right?
Exactly. It's a major bearish signal for technical traders.
And it's currently hovering right at this critical make-or-break support level of 412 rupees.
Barely hanging on. And the RSI, the Relative Strength Index, is at 34.23.
Which means it's bordering on completely oversold.
Right. But the really scary part is the volume. During these price drops, we're seeing huge volume spikes, which indicates active selling.
Distribution.
Exactly. Big players are unloading.
So what does this all mean? Because I'm looking at this, and the company is making over 1,300 million rupees in profit, yet the stock is on life support.
It's a total paradox.
It feels like Tanla is running a marathon in record time, but the spectators in the stock market are just throwing tomatoes at them.
That's actually a great visual.
Does the market know something the balance sheet doesn't?
Well, this is where we have to separate fundamental performance from stock momentum. Even with an oversold signal, traders really shouldn't just jump in blindly to catch a falling knife.
Right, because oversold can always get more oversold.
Exactly. The market needs to see a true bottoming out formation, or at the very least, a close above that 50-day moving average before the trend is safely reversed.
And that moving average is way up at, what, 475?
475 plus, yeah.
So they have a long way to go just to prove it's safe.
My very long way.
So to finally solve this mystery, to figure out why investors are selling off this highly profitable company, we really had to dig into the 12-month news coverage and analyst reports.
To see the psychology behind the sell-off.
Exactly. And the viewpoints are incredibly conflicted. It's a total tug of war.
Let's look at the bullish side first.
Okay, the bulls. They point out that Tanla is completely debt-free.
Huge plus.
They hold a massive cash balance. 9,387 million rupees in cash.
They also increased their ESG score to 74.
Gave an interim dividend of 6 rupees a share. And this is the crazy part. They executed a share buyback at 875 rupees.
That is the ultimate signal of confidence from management.
Wait, so a share buyback at 875. That means the company itself, the insiders, thought the stock was a good deal at more than double its current price.
Yep, they put their money where their mouth is.
Are analysts just impossible to please? Like, what is the bearish side saying to counter all of that?
Well, the bears are looking at growth rates. Analysts project a moderate 9.6 to 11% revenue, CAGR.
Compound annual growth rate.
Right. And some have actually slapped a straight-up sell rating on the stock.
L rating on a company printing cash. Why?
They cite average quality, specifically a modest 16% EBITDA margin,
Oh,
and an underwhelming 5-year sales growth of 14%. But the deepest fear, the real driver here, is the fear of CPaaS market saturation.
Saturation, meaning they think Tanla has already won everyone they can win in India.
Exactly.
So if we connect this to the bigger picture.
Yeah, if we connect this to the bigger picture, it really comes down to valuation versus value.
Break that down.
So value is what the company is actually worth right now.
Yeah.
The cash, the profits. Management obviously sees immense value.
Hence the buyback at 875.
Right. But valuation is the premium the market is willing to pay for future growth. If analysts believe the Indian CPaaS market is totally saturated, they just won't pay a premium multiple for the stock.
no matter how much cash it prints today.
Exactly. It's a classic case of the market pricing in a perceived ceiling on future growth rather than rewarding past performance.
Wow. Okay, so the market is basically saying, great job on the profits, but your best days are behind you.
That's the bearish thesis in a nutshell.
And this is exactly why you, the listener, should care about this deep dive. Because this right here, this is a masterclass in reading beyond the headlines.
It really is. You can't just look at one metric.
You cannot rely purely on a pristine P&L statement. If you do, you miss the growth fears.
And you can't rely purely on a bleeding stock chart either, or you miss a fundamentally stellar business.
Right. True financial literacy requires holding both of these conflicting truths in your mind at the exact same time.
That's the real takeaway here.
It is, and it leaves me with this final kind of provocative thought to mull over. We've looked at all the sources, and let's put the pieces together.
Okay, let's hear it.
If Tanla Platforms holds nearly 10 billion rupees in cash,
Debt-free.
totally debt-free. They power the communications for India's biggest banks, they have cutting-edge AI, and their stock is currently lingering at multi-year lows.
Looks cheap.
Very cheap. Does this massive disconnect suddenly make them a prime acquisition target?
Oh, wow.
Like, imagine a global tech giant looking to just instantly buy the plumbing of India's digital economy.
For a massive discount.
Exactly. It makes you wonder who is watching that ticker right now.
That is a fascinating angle. The big players are always watching for discounts like this.
Absolutely. Well, thank you so much for joining us on this deep dive today. We really hope this helped you cut through the noise and keep questioning the consensus.
Never just accept the surface level narrative.
Exactly. Keep digging. We'll see you on the next deep dive.